Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, I'm going to give you an entire wrap up of the day's trade. Well, it was the first trading session of the week, and we've started on a positive note. In fact, we opened absolutely flat with a negative bias, but soon we were seen, climbing higher. The markets gained some momentum, especially the Sensex and the Nifty. They gained some strength on the back of gains in the broader market space throughout the trading session. Of course, there was a lot of volatility that we saw. A very choppy trading session is what we have really witnessed in today's trading session. But definitely, the benchmark indices managed to end higher in today's trading session after all those choppiness and the volatility that we have seen today, especially for the Nifty. If you see, the Nifty managed to climb above 18,300 mark and maintained that level towards the close as well. And this is for the first time in the last 3 months that the Nifty has managed to climb above this level as well, and we are inching closer to the all-time high levels of 18,604. Remember, in the morning session I had told you that most of the experts are keeping 18,100 to 18,600 kind of a range for this weekend. Right on the first day, we have seen 18,300 being climbed up by the Nifty as well. So hoping that more strength may come as we approach the budget, which may trigger a pre-budget rally, since the countdown is just about 10, 11 sessions from now, when we are going to be approaching the budget on 1st of February. Now, when we look at the closing levels today, the Sensex was higher by 85 odd points, or just 1/10 of percent up at 61,308. The Nifty also inched higher by 52 odd points, or 0.3% at 18,308 is the closing level that we saw the Nifty ending the levels at. About 2,100 shares definitely gained in advance in today's trading session, as against 1,295 shares that declined, and 113 shares were remaining unchanged as far as the closing session is concerned. Now, except for pharma and banks, most of the sectoral indices, they ended in the green, of course led by gains in the auto space that was higher by 2%. For the broader markets also, when we talk about mid and small cap indices, definitely ended higher. It was a session that was ruled by the small caps for sure, which ended the Nifty small cap index, in fact, ended at a record high level today. 0.5% higher for the small caps, and 0.2% uptick for the mid caps was seen in today's trading session. When we talk about the stocks specifically, it was Hero Motocorp, Grasim, ONGC, Tata Motors, and Ultratech Cement, all of these that were seen climbing in today's trading session. Apart from that, it was HCL Technologies that dragged the street a lot. 6% of a fall is what we have seen after disappointing earnings. HDFC Bank also saw some profits being taken off the table. Britannia Industries, Axis Bank, and Cipla were the other losers in today's trading session. Apart from this, of course, auto stocks were in focus because of a lot of triggers. Despite the fact that it was a flat trading session or a choppy trading session, a whole host of focuses on the price hikes. Most of the automakers have been announcing that from January onwards. There's a thrust on electric vehicles, keeping the momentum going for most of the auto stocks like Tata Motors. ETF launches are also happy, helping the sector gain some momentum at this point in time on the basket, as the basket of stocks have also posted some smart gains in this momentum. Of course, Nitin Gadkari has made now 6 airbags mandatory. He's talked about that, so that is also keeping the automakers industry and the auto stocks quite afloat in today's trading session. Of course, when we talk about some specific stocks, we do have to focus on how Metro Brands, recently listed stock, and billionaire Rakesh Jhunjhunwala backed Metro Brands, that rallied 20% in today's trading session after it has reported healthy earnings. The company reported 55% jump in its consolidated net profit for the third quarter ended December 2021. So that stock was definitely in focus. I told you about HCL Technologies that slipped about 6%, as there was a report of a 13% drop in the net profit. Apart from that, Ultratech Cement was also in focus. It reported its earnings just a while back, and the company has exceeded expectations. It has reported a consolidated profit after tax of 1,708 crore rupees for the quarter ending December 2021. That is up 7.8% from 1,584 crore rupees in the year ago period. PAT during the previous quarter was also 1314 crore rupees, so 1,314 crore rupees. So that also has seen a sequential jump and a year-on-year jump is what you have seen. On the revenue front, also it has met expectations. It has come in higher by 6% at 12,985 crore rupees, as against 12,254 crore rupees in the December 2020 quarter. Also, the September quarter reported a revenue growth of a revenue of 12,017 odd crore rupees in the September quarter. So there has been a consistent move higher, whether it is sequentially on a year or on a year-on-year basis. So definitely, Ultratech Cement pulling the cement stocks higher in today's trading session. Dalmia Bharat, for example, was also in news on the back of the commencement of new, capacity expansion in the Maharashtra plant. So that also stock was up by 2.5% in trade today. Overall speaking, the market breadth was definitely on the bullish side. Now, most of the experts do expect the continuing earnings, of course, this week will be focused on big heavyweight earnings like Reliance Industries, Asian Paints. They will be definitely taking some of the limelight and providing some more thrust to the investor sentiment, which is already hoping for some big bang announcements in the upcoming budget to get a relief from the pandemic impact as far as the economy is concerned, and to boost consumption and liquidity and demand that has been lagging behind in the overall economy recovery from the pandemic effects. We'll keep you posted about as to how the markets really progress from here on and what are the experts' views. So do stay tuned on to Business Day today. You can like and subscribe to our YouTube channel and stick with us via all our social media handles, that's Twitter, Facebook, LinkedIn, and Instagram. Many thanks for tuning in for now.